Based on what we've looked at, it seems that the economic fundamentals or the economic questions, at least with regards to Indonesia, haven't changed. Earnings doesn't seem to have really improved by a significant clip. What do you think are some of the things that drove this recent rally over the last 2 months that's been good for the Jakarta Composite? And what do you think are those conditions that could actually see this reverse if there is a scenario that's possible where we could see a reversal?
Okay. The only time the Indonesian equity and bond markets crashed were when the foreign investors exit in a hurry. You know, this is what happened in 2022, 2018, back 2013. Basically, when they stampeded toward the exit, that's when both the equity and the bond markets would crash. So my question would be, in current times, what kind of events would result in that kind of outcome? In my mind, there are two clear risks. First risk is about the economic conditions of Indonesia. And the second risk is if there is a crash in the US bond market itself. Taking them one by one, talking about the Indonesian economy, first of all, the impact of tariff is only slowly coming to Indonesian economy. Now, everybody is focusing on the potential decline in Indonesian exports to the US. To me, that is not actually the most risky proposition, because in terms of contribution to GDP, Indonesian GDP, the net export is pretty low. What is far more important in my mind is that China is successfully redirecting their exports to the US, to other regions, including Indonesia, of course. So last year, there have been 77,000 workers laid off because their businesses could not compete with cheap Chinese imports. And last year, the president was Joe Biden, and there was no trade war between China and the US. So this year, with such an aggressive trade war between China and US, you could expect quite an impact. First half, the number of layoffs have actually increased by 32% year on year. So and looking at China itself, you know, in full year of 2024, the portion of China exports to US is about 14-15% of their total exports. In the first half of this year, that has gone down to 11%. So China has been very successful to reorient their exports. Their total exports increased, actually. The total export revenue for China increased by almost 5.8% in first half of this year. So they exported a lot more to Europe, to Southeast Asia, to Africa, and definitely to Indonesia also. That effect will have a really devastating impact on Indonesian economy if that results in a lot of layoffs and therefore, you know, big reduction in consumer spending. That's the first risk on the Indonesian economy. The second risk is if there is a crash in US bond market. Here, I think we are a little bit more skeptical. But for example, the US investors have been so gung-ho about potential interest rate cuts this year. I think the Fed fund rate futures is penciling in 85% chance for a cut in the September FOMC meeting. If that doesn't happen, for example, that probably would have caused quite a problem for the bond investors. Now, in the past, the Indonesian bond markets almost move in synchrony with the US bond market. So if the US bond market should face a big fall, then that is obviously a risk for Indonesia. However, some people might argue that this time around is indeed different. And the reason why it's different is because we have a US president who, with his chaotic style of governing, is really hurting the status of US Treasury as a safe haven. So that kind of strong correlation between US bond market and Indonesian bond market may not happen this year.